up today. And today we have a wonderful guest, Emilia Bayer, growth strategy lead at Primer.io. Welcome. Thank you, Emilia. Thank you for joining us.
Hi, Andre. Hi, everyone. Thank you so much for having me. I'm really excited to be here. My name is Emilia Bayer, as Andre just mentioned, and I'm a growth strategy lead here at Primer. In my role, I work with startups and scale-ups, and I help them navigate the complex world of payments and ultimately achieve global growth. For those of you who don't know Primer, we are the world's leading payment infrastructure, and we help businesses build flexible, unified, and scalable payment stacks without the usual headache or complexity.
Yeah, web payment just growing as crazy with web to app getting more popular and popular. Yeah, and web payments on iOS. So we decided to sit down and just go over a few questions regarding payments and payment orchestration. And by the way, we just launched a partnership between Primer and FunnelFox, so stay tuned with us and we'll drop updates soon. Yeah, and if you have any questions regarding web payments and payment orchestration, you can drop your questions here in the chat and we'll go all the questions here in our session. Yeah, and we have a recording of this session, so you'll get all materials and can watch it again in the recording, and we'll send it in a follow-up email. All right, let's get started. And so what the main challenges that the companies, the startups face when they are trying to web payments, whether it's web funnels or web payments in iOS?
Yeah, I think it's a very timely question as well, because obviously with all the latest announcements of the App Store rules and all the questions that came our way as well. Really interesting questions. Again, payments are complex, right? So sometimes it's a lot easier to just outsource your payments to Apple and just let them handle them. And although that comes with a high fee of like 15 to 30%, I understand there is a place and time for some companies to actually just go down the safe route. So obviously Apple alleviates a lot of that headache for you. So they offer you like the most seamless, frictionless experience for a very, very hefty fee, right? However, I think especially with companies who are a lot more nimble and future thinking, it does make sense to bring some of their payments in-house. And payments are complex, let's be honest about it. So it's probably not going to be a walk in the park like most people expect. That said, there are a lot of benefits to be had. So reduce commissions from 15 to 30%, all the way to perhaps 1.5, 6%. You also get ability to access your clients, so really, really own your clients and build that relationship with them. And ultimately, you also get to build a payment stack that can support the future growth and the strategy of your company the way you want.
Yeah, it's great. And so payment orchestration, it's I think the most underrated thing in web payments. And there is a common opinion in the industry that the payment orchestration is for like big companies who running a lot of transactions, and it's more advanced thing. What do you think? What's your opinion on that? And is it only for big players, or like startups and small companies also can apply strategies?
Again, another really good question, and it really depends on how you look at it, right? So you can have a large enterprise company with 50 people looking after their payments and a really, really complex infrastructure who are looking to abstract that complexity and make it really simple and cross-functional. So allow different types of users collaborate in real time and manage that payment stack in one place. So that makes sense for them. I think for smaller companies, there is also a great it could be also a great way for them to start owning and building on top of their payment infrastructure. And that is because they don't necessarily have the subject matter expertise or the resources to dedicate to payments, right? So if you're using a no-code platform that doesn't require any maintenance or coding, you can simply assign, I'm not sure, like, I don't know, someone in your finance team or someone in your potentially product team who's not technical to start experimenting with payments, right? And also you then have access to payment experts who can really help you guide your strategy as well. So yeah, it really depends. I think there is a place for both of these types of companies to coexist within the orchestration space.
Yeah, it's great. So in a nutshell, what's what the payment orchestration is? How does it work?
Yeah, so
Like in the simplest word, yeah, for like really beginners. How can you explain that?
the word explained to my mum, perhaps. So payments orchestration, who's absolutely not familiar with payments. Yeah, great, thank you. So payment orchestration is a platform. It's a technical layer that allows you to unify all of your different payment and payment adjacent tools. So whether you have one PSP, a fraud vendor, and perhaps Power BI tools or something else, like it allows you to bring everything into one place and seamlessly manage those tools together. So it creates interoperability. The other really great benefit of this is if you have multiple different PSPs, like you can see on this slide here. So say, for example, you have Stripe, Adyen, and Nuvei, or whichever provider you have. This means you have to manage 3 different stacks, 3 different checkouts, and ultimately use analytics from 3 different tools. And they don't often speak to each other. So say, for example, Adyen might have one way of classifying decline codes, Stripe might have a different one. So when you bring all of that into payment orchestration, you abstract that complexity, you harmonize and you unify your stack, and you essentially work from one place. So you have one source of truth.
Okay, instead of like integrate with each payment provider, I can integrate with Primer and like have only one checkout, and the Primer will route the payments through this among these 3 different providers. Is it right?
Exactly that. So to your point, especially when it comes to customer experience, you really want to create that consistent experience across different channels, different devices, and different perhaps geographies as well, right? So you're able to create one unified checkout that works across all of these different providers. And what then happens behind? So to a customer, it's a very consistent and seamless experience. And what happens behind the scenes or under the hood is that we then, based on your business logic, based on your strategy, we then help you route those transactions.
Okay, got it. So what's the main advantages to have like different payment providers under the hood and route transaction between these payment providers?
Quite a few, actually. So first of all, cost effectiveness, right? So typically, especially when you're just growing, you might have very unfavorable terms, let's put it that way, with one provider because you're still new, you don't have transacting history. But as you start growing, it really makes sense to diversify not only your risk, but also your operations, right? So you might decide that for all the transactions in the US, you might want to route them to a local acquirer, so a local provider, which means you will automatically unlock hopefully cheaper rates and higher authorization rate. And what I mean by authorization rate, different people call it differently. It's payment success or payment approval.
It's like the conversion rate when a user clicks I want to pay and the transaction goes through. Yeah, this is right. Yeah.
Exactly,
Okay.
yeah.
Okay, great. So in terms of like so As far as I understood that if I, for example, have like mobile app or any other like app, and I want to scale it globally and sell, like, let's say, subscriptions on like digital products in Latin America, and Europe and the US, I can connect different payment providers locally placed in these markets, and leverage lower prices in terms of lower fees, and acceptance rate. It's like approve rate will be higher than if I use only one payment provider. Is it right? Yeah.
That's absolutely correct. Very spot on. And I think there's just one thing to add on top of that. So I always advise my clients to A/B test. So whilst if you're A/B testing them separately, you might not have the same unified data. When A/B testing by Primer, first of all, it's super easy to do. You don't need to code anything. You don't need to kind of, everything happens with a few clicks. So you can really adjust in real time. But then you're also looking at data, you're comparing apples to apples. So you're not comparing apples to pears. And that way you can simply spend, I don't know, like 2 weeks A/B testing a new provider in a new market, and then you can see for yourself which one performs better. So that's one thing. And the other thing as well, when it comes to orchestration, you have the safety net of fallbacks. And again, I don't want to overcomplicate things with terminologies, but different companies or different people use these terms differently, right? So some people say cascading, some people say fallback, some people say retry or recovery. Essentially, most of these terms mean the same thing, apart from retries. So I'll explain what I mean by fallbacks. Fallbacks is when you're processing one payment, but you can choose to send it to two different providers within the one transaction. So what I mean by that, a customer clicks pay. Obviously, they're going through the whole chain of payment systems, and then they land on your first processor. And if that transaction doesn't go through for some reasons, it might be a soft decline by an acquirer, the same exact transaction without any impact on the customer experience then gets routed to the second provider. And all of that happens within milliseconds, so there's no friction when it comes to the customer experience. But again, when you're A/B testing, you can still have that reassurance that even if your new provider doesn't perform to your desired levels, you still have the safety of your incumbent provider.
Mm-hmm. So it's like some kind of like automatic rules that Primer created or customer can create themselves. Yeah.
Exactly, and then you can A/B test and see what performs well.
Yeah. Do you have like A/B tests built in Primer, or it's like external tools? Just curious about the system.
Absolutely, it's super easy to enable, and it can be enabled both on checkout when you want to test different payment methods, and within workflows as well using metadata. And then you can go into observability, which is our analytics tool, and have a look at how those different cohorts perform.
Got it. Speaking of like different payment providers and improving acceptance rates and fallbacks, yes, scenario. Do you have any benchmarks? How can you improve the conversion rate, like from checkout to purchase, with these strategies?
Absolutely. Again, I'll be super honest with you. It's pretty much case by case because it really depends on your MCC, so merchant category code. It really depends on your transaction history, the robustness of your MIDs, so merchant IDs. So how long have you traded? Like all of these little potentially insignificant in the eyes of the client. All of those different factors do matter to people who actually process payments. Yes, but I can give a case study of one of our clients, and we've seen a 5% uplift in their authorization rate just by using Primer, and 30% conversion rate by obviously enabling their checkout on Primer. And when it comes to revenue recovery, we've seen over a year, they've recovered around 500,000 in recovered revenue. That's fallbacks.
Mm-hmm.
But again, I'd like to caveat, everyone is very different. Everyone's setup is different. It also really depends on geographies. It depends on the partners you would choose to process your payments. So yeah, but you have all the tools to help you achieve those results.
Okay, great. So it's like roughly 30-40% upside of when you can connect like orchestration and with all these fallback scenarios use cases. Something like that.
I'll put a little asterisk saying terms and conditions apply.
Yeah, sure. Of course, yeah. It's reasonable because it depends on the product, depends on market, and a lot of parameters, especially in payments, because it's there are a lot of tiny details that you need to take into account when you take a test, and like it depends on configuration, of course. But yeah, it's just to provide some kind of like understanding how can you improve the conversion rates and your revenue eventually. And by the way, one more use case that I want to add from my perspective also of using different payment providers, and it mostly relates to web funnels, for example. There are like sometimes cases when Stripe can block your merchant and you can just stuck with no payments with your web funnel or even for mobile apps right now. And with this functionality, you can just be safe and eliminate this risk connecting different I know accounts from Stripe. Something like that. Am I right? Is it one of the case of using orchestration, right?
Absolutely, and you've literally just touched on a really important point there, and I'd like to unpack it a little bit if you don't mind. So
Sure, yeah.
Similar to what you said, I've seen so many different cases in my practice where either customers come to us saying, just received a love letter from Stripe saying my account's been terminated, and then they're panicking because they're a subscription business, meaning that like if they're given 4 days to migrate, that means all of their transactions or all of their business will cease trading in just 4 days, right? And what that means is that they need to find a new provider, they need to sign those agreements, and they need to migrate all the tokens. Why is this super important? So you touched on future-proofing and de-risking the operations, right? So if you're going with a single stack PSP, you're essentially using them as your token vault. And again, without going into jargons, what that means in real terms is that those providers own your customers.
So actually, it's a payment details. Yeah, it's like the credit card details or like Apple Pay tokens or something like that. Yeah,
exactly that. And again, I've seen this with one of my clients, and it's a real life example. Again, I'm not going to name names, but one of these providers refused to migrate their tokens. So they refused to release their tokens altogether.
Oh, really? Yeah, they refuse to migrate the tokens. Is it legally?
That's the thing. So we went through the contracts as well. So I got some support from our legal team, and it was written in the contract that they're only a custodian of tokens, so they were not the owner. But again, that provider pushed back saying they had legal reasons as to why they didn't want to release the tokens.
Yeah. Let's like discuss it a little bit more detailed because like I think it's a very important thing because I really like see that sometimes cases when, for example, Stripe or any other payment provider can block your merchant, which means that they block your account and you cannot accept new payments anymore. And at the same time, these tokens that means that payment details stored in that payment provider, which means that all recurring transactions, all recurring payments can be like executed anymore. So it means that you like lost all your subscriptions or recurring revenue and something like that, which is extremely important for subscription-based businesses. Yeah, and so how Primer resolve these situations?
Yeah, so with those particular clients, the first thing we had to do was to migrate their tokens. So obviously, like we all know that finding a new partner takes time, right? The first immediate priority for them was not to lose the clients. And we see a number of clients like this. So we got them up and running in less than 4 days, and we were able to trigger the token migration process. So which means when customers come to us saying we received that love letter from Stripe or whoever, it means that we can then provide them with a central vault. So it's completely agnostic. It's not tied to a processor, which means that you own your clients. So we then obviously upload all the tokens, we store your client data, and then that gives you time, although you can't accept new payments, that gives you time to find a new provider and then start processing safely. And I'll give you another example, actually, which was like quite significant as well. With this client in particular, at the time when I was speaking with them, they weren't blocked, but it was a concierge service, and essentially they were providing concierge services to ultra high net worth individuals. And why this is important is they were taking the money from clients and they were booking their hotels, their travels for them. And these were like tens and thousands of euros. And what happened was they took the money from the client, and Stripe saw the amount, saw the source of that money, or the country where the money was coming from, and decided to put a block on their account and investigate the account. And why this was super important to this particular client is they were supposed to book all the travels, right, for this couple. And all of a sudden, my client had to take out a loan to cover all the travel costs until the investigation was taking place. And you never know how long that can take, right? So when they freeze your account or put you on rolling reserve, you're almost at mercy of these providers.
Yeah, it's insane. It's crazy stuff. Yeah. So and Primer just takes these tokens and stores in securely in the like stores and vaults and so on. I don't know how this works. Basically, okay. And also I heard about like network tokenizations. Is it like kind of like different type of tokens? How does it work?
Exactly. So again, if I was to explain this to my mom, so you have payment tokens, which are almost, you have your processor, you have your payment tokens to process a payment, right? Network tokens come from card schemes, so Master and Visa card. So these are unique numbers that are given to each individual merchant, and essentially they're encrypted. So say if you were to lose your wallet, these card schemes then can decipher, so they can decrypt the cryptogram that they provide. So the way network tokens work is they're fantastic for subscription merchants. And the reason for that is if a client loses or loses their card, or if it gets expired, then Primer can act as your token requester and essentially send that request to Master and Visa card and swap out the details. It's legal. Have to mention this because sometimes people are like, is this legal? It's fully legal. It's provided by the card schemes, and essentially they allow you to swap out the details and provide you with a new cryptogram.
So a customer doesn't need to do anything and like update card details, something like that, and merchant doesn't need to do anything. So it's like it's automatic swapping the details. And oh wow! So like, do you know any like do you have any insights and benchmarks how much you can save revenue on this like approach?
Yeah, I actually had some stats. So first of all, network tokens also increase your authorization rate, because obviously with the payment flow, right, it goes from your processor all the way to card schemes, right? So ultimately it's the card schemes that can penalize you. And so because obviously like network tokens are a lot more secure, you get a higher authorization rate as well. I think it's up to 8%, if I'm not mistaken. Sorry, up to 3%, and
3%,
up
okay.
to 3%, and up to 26% fraud reduction as a result. To give you a personal example, it literally happened to me the other day. There's a cafe that I always go to, and I have a digital wallet, and I didn't realize that my card had expired. So I placed a payment, and then my transaction went through, but I get a notification saying my card was expired. But I was like, but my transaction went through. So whilst the front end thought that my card was expired, because of network tokens, my transaction actually did get through, and I did manage to get my coffee.
Okay, got it. What like difference between you have like different with Pfizer, you have different segments of customers. It could be e-commerce, web to app for like subscription-based businesses, and right now probably we already have customers with web payments in iOS. What's the difference between these customers? What's the like I know like probably specific things that need to take into account for web to app and web payments for iOS?
Very interesting question. Again, they're very different, and I'll tell you why. So again, like when you're looking at e-commerce merchants, again, really depends on the vertical, right? So typically, if we're talking about beauty, fashion, and clothing, they tend to be lower risk. Whereas app developers or like app-based businesses, especially digital e-commerce businesses, as in like digital products, they tend to be considered as a high risk. And the reason for that is because these types of businesses tend to have high chargeback rates, high disputes, high chargeback rates, right? Someone comes and says, don't recognize this payment, never paid for a horoscope, or never been on an online dating app.
It's true. It's common thing in web funnels and
exactly.
selling subscription on web. Yeah.
Whereas if you're selling clothes, or if you're selling beauty products or supplements, again, supplements might be different depending on the types of supplements, but these are physical goods, right? So you can prove that they've been shipped and they've been delivered. So first difference would be obviously like different risk profiles. And as a result, that would mean that there would be fewer PSPs that might want to do business with you. That also means that your rates might be higher. And obviously, depending on your merchant MCC, so merchant category code, it can also mean that your auth rates might be lower than a standard physical goods retailer. And the other difference as well, especially with physical retailers or e-commerce players, they might use different payment methods. So a lot of them might use buy now, pay later. Some of them are now starting to use.
Exactly. As for like web funnels and web payments, it's mostly Apple Pay. Yeah, Apple Pay,
PayPal.
PayPal.
Yeah.
Exactly. Yeah. So like summing up, you can using payment orchestration, you can be covered like from risks to be like banned from one payment provider, so you can swap payment providers easily because like and with all your subscription, because all tokens, all payment details are stored in Primer side, and within Primer you can switch between payment providers easily. You can like expand your product to new markets easily because you can easily connect different payment providers with local payments for high acceptance rate or approve rate. Yeah, is it right?
So many different ways of saying, like, approval rate, success rate, authorization rate.
Yeah, and reducing payment fee and you can get fallback scenarios to get payment successful, even if it's failed the first time in the one payment provider. And also you can leverage tokenization thing with like network tokenization, yeah, for getting covered for expired cards. Anything else? It's like it's already huge, yeah. It's like it's really like important thing, and I think that most of the companies should apply these strategies at the very beginning, because just to eliminate the risk of like some different scenarios, and to get higher performance. If we're speaking about like web funnels, web to app, you can get higher performance with this acceptance rate is higher, and commission fee. Of course, it's like it's also it impacts your ROI of your acquisition channels. What else?
How long have you got?
Yeah, I heard. Yeah, I heard about like, and you mentioned that with a retry logic, when you can retry charging users if the first payment is failed. Yeah, something like that. How does it work?
Yeah, so there are different ways. Again, retry is probably more of a separate strategy that falls slightly outside of orchestration itself. But yeah, again, like there are a lot of really interesting insights about smart retries. Again, like different people call retries differently, right? So fallbacks in our books, so how we define fallbacks, they're different to retries. So fallbacks is when you're sending to one processor, it declines the transaction, and we automatically send it to the second one. What we mean by retries is when, say, for example, your subscription payment, so MIT payment, fails because the customer has insufficient funds, or like perhaps, I don't know, there was an error or some sort of mistake, which is a soft decline, right? You can then build a retry logic saying, I'm actually going to build this client in 2 days. Or perhaps I'm going to try a different amount, or I could try this transaction 2 times. Now, when it comes to retries, I always tell my clients, be super, super smart about retries. First of all, they cost you money. So every time you retry, it's another payment fee that you're making, right? Secondly, understand your geographies and your clients. In America, payment cycles, so salary payment cycles are fortnightly, right? So every 2 weeks, a person gets paid. Whereas in Europe, it's monthly, right? So if you've charged someone in America and you received an insufficient funds decline, it means you're most likely to retry it in 2 weeks, or like, let's say 7 days, and you might successfully recover that payment. If you do that in Europe throughout the month, it's probably unlikely you'll recover the same amount. So again, be really smart about it, because you can also get penalized and banned by the card schemes if they see too many tries, because that can almost imply that it's a fraudulent activity happening. But going back to your original question, there was one thing I really wanted to add, which is 3DS logic. I know that obviously it's for a lot of our developers, US is a core market that they're really focused on, but 3DS is super important in Europe. And I think it's sometimes something that's either overlooked, or it's a complex matter that no one really wants to think about. But what payment orchestration allows you to do is, let's just break it down a little bit. For those who don't know what 3DS means, it's 3D secure, and it's a mandatory regulatory requirement to authenticate transactions in Europe. So what that means is, and for all of us who are based in Europe, we often go through a payment flow either online, if we're not in store, right? So there's card present and card not present. So if your card not present, so you're shopping online, you're making a payment, you might get a challenge that on your phone that requires you to approve that transaction.
It's
So,
like two-factor authorization. Yeah, it's like the second factor.
Exactly. Yeah. So if you're not checking out with Apple or Google Pay, that's the authentication that you're required to do by law in Europe. And if you were to do that without orchestration, it means if you were to manually route, every time your first provider, say for example, the client clicked pay, they went to the first provider, they've completed their challenge, and then they got declined. They'd have to repeat the transaction again and do another challenge. Whereas because we have a completely decoupled and agnostic 3DS, it means that we only need the client to pass that challenge once, and the transaction will continue. So they click pay, they complete the challenge, they get declined by the first processor. We automatically send that response to the second processor. And if they approve the transaction, the customer only does that challenge once, which is again saving you costs on 3DS and ultimately does not create additional friction in the customer experience.
Yeah, sure. Yeah, it should like increase conversion rate very well because so basically user doesn't need to like repeat it again. It's like the flow is not so friendly. By the way, it's like always with friction. So is receiving SMS or like approved transaction in mobile apps, which sometimes it's doesn't went through and something like that. And yeah, it's great. How does it work? Everything how everything works in Primer? How can I configure that? Can you show us some like demo or something like that? What's
Yeah, of course. I'm more than happy to.
What it does look yeah.
I'm going to try to share my screen because it's the first time I'm using this platform. So please let me know if you can see my screen.
Sure.
Right. So perfect. Right. I think you should be able to see it now.
Yeah, I can see the screen. Yeah.
Fantastic. So we're a completely no-code tool. So anyone, regardless of their experience in coding or development, can use the platform safely without fearing that they'd break anything. Again, I'm not technical. It literally took me like a couple of days to learn to build my own integrations and get up and running. So the first thing anyone would do, they'd come into the integrations marketplace and they would build their perfect stack based on either relationships they already have or perhaps the providers that they're planning to go live with. So let's say for this example, I'm going to pick Adyen. I can see which payment methods and countries it's supported, all here. And then all I need to do is simply connect by inputting my credentials. And you can find a little cheat sheet here. So once you've plugged your credentials here, all you have to do is just simply connect and then enable some of the webhooks and API calls on the Adyen side. And that's literally your integration done in a few clicks. And the beauty of this is not only you don't need to spend all that time integrating into a new provider, you also don't need to maintain that integration either, because we take care of all that maintenance for you. Then you can simply enable, thank you. Then you can simply enable your checkout and checkout rules by dragging and dropping or toggling things on. Super simple. And as you can see here, you can set different parameters for different payment methods in different countries. You can exclude certain payment methods from certain categories as well. And ultimately, this is the orchestration part that we just spoke about. You can simply start building workflows based on your routing logic or the type of business strategy that you want to explore. So say, for example, you can route all of the UK payments, or we can choose US payments to a certain provider. You can do that simply here. You can split your traffic here. And when we talked about payment recovery, this is where you can enable your processes, right? So you can have your first processor that you know might be cheaper, perhaps, and then you might have a processor that you know performs really well in this market, or vice versa. So either way, you have an insurance policy, and how you want to set these rules is completely up to you. And then when we touched on 3D Secure, this is where you can enable your agnostic 3DS to ensure that both transactions are covered. And that's literally in a few clicks. I've shown you how we could define a routing logic.
Yeah, it looks like very simple. It's you explain the complex things, and but in the interface, it yeah, of course, it's there are a lot of configurations, a lot of settings, but I think it's, this logic chart flow looks really simple and self-explanatory. Yeah, it's great.
Thanks. Yeah, and again, like there are a lot of other capabilities that you can go into data and start looking at what performs, what doesn't, and then fine-tune a strategy in real time. But yeah, again, it's like using Figma to design something, right? You don't have to be a real designer to be able to use Figma or Canva.
Yeah. All right. So what's like I think at the end, what's your recommendation for mobile apps or like subscription-based businesses who are running web funnels, web to app, or web payments in iOS? Start with what's the like how to guide, yeah, how to get started with web payments.
Very loaded question. There's a, I mean, first of all, really understanding where you're at on your journey, right? Are you using a single processor? What's working, what's not working? So start by analyzing your decline codes. What are you seeing? I think like I'd always start with what's working, what's not working, what are you trying to achieve here? And then obviously when you speak to your providers, really trying to understand if they're the right providers for you. And what I mean by that is, are they invested in your success as much as you are? Because it's super easy to like just sell you a provider or a tool, but will they be there when things don't go to plan? Can you reach out to them? Will they support you? So really starting to build those relationships. I see that a lot with some of my clients who just think, oh, that's just another vendor. But you don't realize how critical knowing that person is, especially when something goes wrong. And so build those relationships. Try to always have an advocate, because again, like, you know, you might get flagged and you might go in a monitoring program. Who's going to help you on the vendor side to get your accounts unblocked, right? I had a client, major issues with PayPal. Just one email helped them unblock that account. So again, never underestimate the human aspect of things. And I think that's one thing that always gets overlooked. And then second, I think the rest is kind of self-explanatory, right? Understand your markets, understand the dynamics within those markets. Again, if you're building retry logic yourself, then how do your customers, what are the payment cycles in those countries? What are the payment methods popular in those countries? If you're expanding into Brazil, you have to have PIX. If you're in US, PayPal is your friend, right? Apple Pay and Google Pay as well. So understanding those nuances, understanding, like, again, being really tough and selective with your partners. Go to them, ask for their auth rates, ask for their performance within your category. Again, when you get onboarded with those merchants, ensure that you're on the right merchant category code, MCC, because that's very crucial. If you're on the wrong code and you don't know about it, you're probably paying high fees and you're probably marked as high risk. And there's probably no need for it. Again, I can tell you so many things. Super basic, but can really impact your VAMP rates or chargeback rates. No, check your statement descriptors. Make sure that all of your statement descriptors are correct. We have, especially app developers or like app companies who are building multiple different apps and using them under portfolio company, and using the same checkout for all of those different ensure that your descriptors are the same across the whole portfolio. Because if someone is buying one app and they receiving a payment from a completely different company they've never signed up for, they're probably freaking out, right? So all of those small, really like insignificant details do make a huge difference.
Yeah, that's true. It's all about payments. A lot of, as I mentioned, a lot of tiny details that I don't know, add up the huge thing, like in huge upside or downside if you do it not properly. So yeah, it's really important part of the flow in the payments can make you like really like advantage leader of the market with a higher conversion rates and higher, really effective acquisition like funnel or something like that. But also, if you underestimate this strategies, you can probably lose your effectiveness, performance of the funnel. Yeah, and all the stuff regarding the descriptors and merchant code, it's so like unobvious in the very beginning that I'm sure that like majority of app developers don't know that, and we just started with that, and
Yeah.
sometimes end up with like high risk category in Stripe, for example, with getting a lower conversion rate and high risk to be banned, and in Stripe, yeah, it's very important.
Yeah, and again, I can talk to you about all these sexy things around routing and fallbacks, and they're great, and I think we've discussed them at length. It's just all those minor things that tend to kind of get overlooked, and things that most people don't even think about that actually do play a pivotal role. And again, like just to that point as well, especially when our developers are building apps outside of Europe, where 3DS is mandatory, they don't even realize. They come to me saying, "Oh, I don't want 3DS." You're like, "No, you have no choice. You have to have it." Like, it's not.
Sure.
So understand the regulatory framework of those particular markets as well.
Yeah, it's not optional. Yeah, it's mandatory.
Yeah, exactly.
Yeah. All right. Thank you very much, Emilia. It's very very insightful, very helpful. We don't have questions in our chat today, unfortunately. Guys, if you have any question later, you can send us messages in LinkedIn or emails. Feel free to reach out to us, and we'll cover them. All right. Thank you very much for joining us, and Emilia, thank you very much again for such insightful conversation.
Thank you so much, Andrew. It's been a pleasure.
Yeah. Bye.
Bye-bye.
Nice day. Bye.
You too. Bye.